Hey everybody, Frank Chen here with REIClub.com, your link to creative real estate. Today, I got a great video for you on how 1031 exchanges are really going to boost your real estate investing business. Now, like in all my videos, everything I talk about, I do include in the description below. Simply click show more and you can follow right along. So I've broken this down into 7 benefits, with the first one being probably the most important, which is deferring capital gains. Now what I mean by that is by using a 1031 exchange as an investor, you can actually defer paying capital gains tax. Now, generally, when you sell an investment property, you have to pay the tax on the capital gains, which is your profits. Now, between the IRS and the state, it can equal between 15 to 25%, depending on where you live or which state you live in. Now, these taxes are deferred until you either sell it in a non-exchange format or until you die. Now, what's interesting is, say upon your death, when your heirs take over the property, all former capital gains is actually forgiven. So this is actually a great estate planning tool if you've never considered it before. All right. Number 2, time value of money. Now, by using the time value of money as an investor, what I mean by that is using the tax savings, you can actually reinvest and actually earn more over time. See, let's say you have an investment that you're looking to sell, but instead of exchanging those profits to your next property, you decide to pull that out and pay the taxes. Well, that money you don't get back, and you cannot apply that to your next deal. That's money wasted, especially if you're planning on quick turning properties. Then the 1031 exchange is probably a great opportunity for you to save on this money and really apply it and make more money over time. So really consider that. Number 3, generating more cash flow. Now, as an investor, you can generate more cash flow by exchanging an investment property for a property with higher cash flow. It's that simple. It can either be done by investing for a bigger property. If it's more expensive, generally you have to pay for that difference, or a similar property, possibly in a different area, that's just making more money. Okay? Number 4, diversification. Now, using 1031 exchange allows an investor to really move to a different market or even move closer to home. Say you have properties out of state, you're trying to consolidate, you can do it using this strategy. Now, with the market changing as much as it has, it really allows investors to invest in areas where the markets are, starting to be hot, and a shift with the market where demand is higher and property values are higher. So it allows more flexibility for you as the investor. Number 5, avoiding management headaches. Now, exchanging properties for another property that does not require as much work or responsibility, okay? Like a good example would be switching from, say, a residential type apartment to a warehouse or commercial tenants. This does not require as much bookkeeping or working hours. If you're maybe a commercial landlord, this maybe resonates with you better. Number 6, dissolution. Okay, now this is a great way, or this strategy is a great way to really split up investment properties when there, say, is a partnership involved, maybe a divorce that's going on, or even a death in the family. So you can trade maybe one of your properties for several smaller ones, or you can trade a bunch of small ones for a larger property, and you can even additionally trade in residential for commercial properties. Now, of course, we do encourage you to consult with an attorney when multiple parties are involved. That way, you're protected and things are fair, things are equitable, but ultimately you're protected. Now, last and not least, number 7, real estate investing strategies. These are all strategies that I've been giving you will allow you as the investor to really preserve your equity, because they are all, these are deferring your taxes and increasing the value of your investment over time. This also allows you as the investor to really modify your portfolio as the market shifts, and leveraging your equity as an estate planning tool. Okay, now using IRS 1031 exchange, or IRS code 1031, doing a like-kind exchange as an investor can really help you defer your taxes, which you can reinvest and really create bigger profits over time. Now, ultimately, using these real estate investment strategies will preserve your equity and, of course, increase your cash flow over the next several years. Now, again, guys, this is Frank Chen with REIClub.com. Please take time to leave comments below about what you thought about the video. Click the like button because it really does help us out. But most importantly, if you haven't already, go ahead and subscribe to our YouTube channel so we can keep you informed when brand new videos just like this are posted. Again, thank you guys so much for your continued support. Look for our new videos that we try to post every week. And again, we look forward to talking to you next time. Take care, good investing, and bye-bye.